What is up, everybody? Logan here again. Today I'm joined by Theta Profit. Also, Jason's his name, and he has a YouTube channel. You guys should go check that out below. He has one of the most impressive accounts that I've ever seen, and I'm super excited to have you join us today, Jason. How you doing, my man?
I'm doing awesome. Thanks for having me.
Heck
Thanks
yeah.
for reaching out in the beginning too. That's super cool of you.
Well, the coolest part, I think, I shout out to Steven and Maz for this specifically, is Steven sent a video into the Discord of yours, and it was, hey, check this guy out. He's rocking these Tesla spreads this week too, because Steven's a big fan of the Tesla spreads. And Maz came to me and said, hey, I put an email together for us if you want to chat with Theta Profit. And I was like, oh, I'm down. And like, thanks to those two guys, like if it wasn't for Maz and Steven, we wouldn't be sitting here talking right now. So they were the ones that took the initiative. Of course, like, I don't know, it's just the coolest thing. And then I commented on your video, and then you said that you had already seen some of mine, and I was like, am I famous? Like, what is going on? I was like, this is crazy. So I'm just super excited to have you on, and your portfolio is insane. I mean, you're outperforming me. I'm up 50% on the year. You're up 541% on the year. So you were outperforming me like drastically. And yeah, I'm just super excited. And if you're cool with sharing your background, I think that'd be really cool.
Yeah, as far as trading went, up until the end of 2019, all I did is bought and hold stock. I didn't trade it day to day at all. And then it was right before we shut down, and I heard news about the COVID, and I was like, well, I know there's a way to make money when the stock market goes down, and if this kind of happens the way it happened, I don't know exactly what I was thinking, but thought it could be pretty bad. But I wanted to be able to position myself to be able to profit on the downside, and that's what really got me started. So at the point when we shut down, which March or so. For me, my company actually just shut down for a month and a half, and I spent 10, 12 hours a day learning as much as I possibly could about everything related to options, and was able to do pretty well from there. So that was my initial step into it. I did not know what I was doing in the beginning, and I was like, well, I started off this account. It's ridiculous because I started off with like $575 in it, and this is what it's grown to from that. So, and I was just like, if I lose $500, whatever, like education is expensive. And worst case scenario, I lose $500, and that's my learning lesson. So fortunately it went the other way though.
That's incredible. So you took 500 during the March crash, and you were buying SPY puts during the crash?
I was.
And it just plummeted, and you know that the VIX exploded, so those premium prices were just through the roof. So your account just blew up. Yeah,
that was that real initial. So it's kind of hard to tell because I've withdrawn about 50,000.
Yeah, definitely.
Yeah, 50,000 out of this account, but I guess from a negative 48 to a positive 13. So what's that, like 63,000 just between like February, like a few weeks here.
Oh my
so that God. Was SPY puts, playing UVXY, and TLT. So those were a few of them. And then some downside on, I think there was some downside like on Carnival Cruise Lines and airlines and stuff too. Some are mixed in there when I was still figuring out what I was doing.
Yeah, those small cap guys getting stomped out. And you can see too, I mean, your account's grown like crazy recently, and we've been chatting about it, but I know you're heavily into playing Tesla credit spreads.
Yeah. So at the beginning of this, like I definitely knew about Tesla, but definitely not as much as I know now. And the more I learned, about Elon and his actual mission, the more I just knew that's a company that I want to hold. So I switched a lot of my holdings, even in like my 401 and stuff that I have outside of Robinhood, and I switched it into companies that I actually believe in, not companies I wanted to buy because they're going up or to play with, or companies I don't own anything by. So yeah, so during that time, I learned it, became extremely, extremely bullish on it. And I think it took me that time to catch up. And then I saw things on the news where kind of people were catching up, where they're like, initially, okay, this is just an automaker and the PE is ridiculous on it. and then they start to catch up and realize really what they are, and they have their hands in so many things. And yeah, that just led to me to be a complete bull. I think I have about almost 200 shares of them now. And then the credit spreads, it just made sense to me, since we can handle the downside in it, and we can manage them and push those guys out. And then there's plenty of room for the upside. And with just straight up calls, great, but we never know when those pops are going to happen. So for me, it's the strategy. Obviously, I've settled into, and it's definitely working out.
100%. Yeah, I've seen. I mean, you're taking some plays in the Discord today, and I know you've been messing with Palantir a little bit recently. But yeah, you have your auto buy Tesla shares every single day. Like, I think that's so smart because, especially in a time like now where Tesla's back to, well, at least this morning, back to December levels, right? Like, we haven't seen Tesla this low since December. I mean, people don't realize how good of a deal that they're getting on these shares compared to, like, they were about to hit $900 like 2 weeks ago. Like, it's crazy.
Yeah.
You know, it's still fantastic. And with the amount of shares you have, it's just, this stock's been a, like, stock of the year. Like, I seriously think it has been.
Yeah, for sure. Probably not going to see the 700 times or whatever, 7x again, which is just fine. But I love the company so much. Happy to hold it. And my outlook isn't, 3 months from now, 6 months from now. I don't think any of us shoot for being rich, next month, next year. It's all super long term. And I'm looking at that long term, like, okay, this is a $4,000 stock years from now, when it's exponentially growing in all the different places it is.
Yeah, that's what initially got me onto it. Is, that's 43% of my long-term portfolios, Tesla shares. And it was just back when Tesla was rallying about a year ago in February. And I picked up some shares at 500 pre-split, right? So, and then I picked up a couple more around the 700 range pre-split. And my whole goal was, hey, I bet in the next 5 years this hits 1,500. Little did we know that when I bought those in February, we'd hit 1,500 in July. And it got up to, I mean, right now I'm pretty sure pre-split around 800 a share is equivalent to like $4,000, right, per share.
Yeah.
Pre-split. So, I mean, just in my brain, I was just like, this is the coolest thing ever, because it actually worked out. Because I had always been buying Apple and had been buying, AT&T and a lot of the blue chip ones. And I was like, you know what if I tried a growth stock, especially one I believe in. I read the Elon Musk book, and ever since then, it was just like, oh my gosh, this is the future.
Right. Especially when your outlook is 20 years, 30 years. Yeah. I mean, it doesn't, I have some stuff that it's all in blue chip, and really it doesn't make any sense to me. Like, why have it? But it's just sitting there collecting its little silly 2-3% dividends. Yeah. Oh, well, it's fine. Yeah. Yeah. And I remember the same thing, like looking at the price. I remember like debating, like, oh, should I buy it when it's like the pre-split, like 960, or should I wait until maybe it's down to 940? But then fast forward, a few months from that, and you're just like, oh, I don't care. That's only 200 and something.
Yeah. And it becomes less of a big deal. Like, where'd you buy it? When you're making all these gains. And I also want to do it, if you'd be able to kind of walk us through your credit spread you have going now. I know you have a couple plays up, and why you chose the strikes you chose. And it doesn't have to be anything too in depth, but just it'd be cool to see kind of some of your plays you got going right now.
Yeah, sure. As far as like on Tesla, so the two that I have expiring relatively soon. So this is just next week. So but we have six more days or so until those expire. Yep. So these were ones I just opened yesterday or the day before, and it was just because I had buying power and wanted to put it somewhere super short term. So I think I opened up like the 730, 725s. I see a ton of support, like, 750, 760. And that's why I'm not touching anything unless it drops below 760.
Definitely.
I'm not even looking to roll them out or adjust them at all. But I just wanted to put something ridiculously safe. I mean, 670 is like way too far down, but there's $3,000. I can make a couple $100 in the next whatever, 6 days. And then same thing with this one. This is probably when it was just dipping below 800. So still another $70 down, which I was fine. But generally, a lot of these I opened when Tesla was up at 850, 860. So a lot of these guys in here, which are all now below the 750 stripe. And generally, like at that time, 880 definitely looked overinflated to me. And I wanted to be just somewhere where I felt comfortable and also had enough time. Generally, I do open them out 4 to 6 weeks. I want enough extrinsic value in there to be able to roll them out if I need to or I want to. And then looking a little further out, this is March 19th. We have 28 of them open. That's 750, which I'm still not touching, but I have quite a bit of time on those guys. And then yesterday I had some that were, I think they were at the 760 level, and I just wanted to push everything out, which has been, this is like one of my bigger pushes out.
Yeah.
So I pushed these all the way out till September, and I pushed them down to 755, 750s, and I pushed them out that far because I want to give it plenty of time. That's where my comfort is. I don't want to wake up in the morning and like you've seen the stress or you've seen the stress, like, the last few days where everybody's stressing down because they have plays that are a lot higher, like 780s or 800s. I don't want to wake up and go, oh no, it dropped $20. What am I going to do? Yep. So I was fine checking those way down the road. I mean, I don't have any doubt like Tesla's ending the year 800 or above. Yeah. So I also have some debit spreads too.
Definitely.
Towards the end of the year.
Take advantage of that upside, with the debit spreads, and sell that call, buy the call, so that you can maximize, or you actually minimize your gains, but maximize that risk management level of, instead of having all these naked calls every day, just take a debit spread, pay that debit really quickly, and see what we can inflate that to via the premiums. But I see you have a lot of other positions where you're either selling a call or buying, or selling a put. Like you really are the Theta Profit right now.
Yeah, a lot of these are actually there's some poor man cover calls in there. So some verticals going on. A few just speculative plays, but I did that obviously in the beginning. That's why I had good gains. But the risk to reward ratio doesn't make a lot of sense. So just kind of like looking at my account here, when I was up to up 70,000 and then went down to 50,000, that's when I was still playing speculative stuff a lot more. And that just like emotionally, that was draining. That was, $20,000. Like at one point I had, I can buy my Tesla cash, and then now I'm $20,000 short of being able to buy my Tesla cash, right? So at that point, that's when I did switch over, and I was like, okay, well, I can take a few percent and literally gamble with it, because I think just buying calls and puts, that's gambling. You don't have any recourse if they go wrong or they go against you, besides just managing it and closing them out. But once they lose value, they lose value. But yeah, so for the most part, like I have some super long dated, like DraftKings 2023, Snap 2023, Dropbox 2023, and then you already know the poor man's covered call strategy. So I'm selling the calls up until 2023.
That's huge. So, I mean, that's really awesome. And I like that Tesla debit spread that I see down there too. That's up 2,300, right? Yeah. Up for
I bought this one pre-split.
Really? Well, yeah. So that's
why I have 5 of them. I bought one.
So it split it with you. It's like, here's 5 debits. That's so cool. I did not know that that's how the splits with debit spreads worked. That they would just 5.
So it doesn't matter, debit spread, credit spread, or calls. You just get Yeah, you just get
times 5.
5 of them for a fifth. Like, well, in
Yeah.
Tesla's case, a fifth of the price.
That's so cool. That's such a great position. And we can see your Tesla one down there too at, up 60, almost 61,000 just on shares.
Yeah,
So
yeah. These are
cool.
just some of my actual holdings in the account too. So 179 shares so far, and the little plus indicates my 200 being purchased today, just like every single day. And then I look at Coke and AT&T. Man, those are just my high interest savings accounts.
Yep.
They're not meant to. I'm not trying to make a ton of money on those, but somewhere to just to stick the money that's not cash that you're risking at all,
100%.
and get a little bit of that dividend.
Yep. I'm rocking
Yeah,
about 160 shares of AT&T right now. So that's like my
yeah,
little high yield interest like savings account. And that's how I try to tell my friends. I'm like, would you rather get 0% at the bank or just
um,
7% sitting in the stock that doesn't move more than like 30 cents a
right.
day?
And I don't know about you. I have all these plays in this pretty sizable account, but for some reason, when that like $100 and something dividend comes, it's pretty exciting. You're like, cool.
Right? Yeah,
I need to hold this.
I love it. Yeah, dividends
Yeah.
are fun and like even though the credit spreads go up and down all day, right? Every day. When you have a just specific dividend payment, it is one of the coolest, like best feelings. I don't know why, but it always just has been for me too.
Yeah, I'll have to share with you. I have something I built that actually pays dividends every day.
Really?
Yeah. Uh, so I built it. I built it in M1 and
Yeah.
have stocks that pay. That was the goal, to get them like every single day. So it's pretty interesting, because then it starts to, and it buys the stocks that are low. So when those dividends comes in, it reinvests it in whatever's down. So my thought is
Wow.
it's all gonna kind of
Yeah,
creep up together.
pick it back
Yeah.
up, whatever, whatever's buying what stock. I mean, that's huge.
Yeah. Yeah, and then some of my other holdings I bought just when everything just dropped, um, like Gap. I mean, I probably bought that for $12 or something. So those are just Tapestry. That's actually a pretty good dividend payer when it comes back up. But I was like, yeah, Coach bags aren't going anywhere. Women still exist.
Coach bags. Oh man, no, that's so awesome. For real. I love all your. I mean, your Snap Leap is fantastic. DraftKings. I mean, that leap. DraftKings should do great. Like those are all such great plays that you have going. And how are you able to manage all of them at once? Do you just kind of?
Whew.
I was gonna say, do you know like what? Do you have like a list? I guess even if it's mental, right? Of like, hey, what should I be looking at every day? Like, do I check the indexes first? Do I check, you know, how Tesla's doing every day?
Yeah, check how Tesla's doing. I mean, I do watch every single bit of information on Tesla I can get my hands on.
Yeah.
Obviously, like stock price is a small portion of that, but any of the news, like I definitely watch all of Rob Mauer's stuff, Tesla Daily, because that gives you a big rundown if you haven't had a chance to pay attention to everything,
Yeah.
listen to every earnings call. But like most of my stuff, I don't want to have to jump on daily or manage daily. So that's the reason, like I'll roll out most of my credit spreads with anywhere from 5 to 12 DTE,
Mm-hmm.
because I don't want to have to worry about it like that day. And I see a lot of people do that, where they're like, I have this thing expiring yesterday, or I have expiring tomorrow, and it's going against me. Well, now you don't have much to work with.
Yeah.
So,
You're.
and, and it's all lessons that I learned the hard way. So
Yeah.
make,
I think everybody does learn the hard way. Like I had times, where I was playing spirit call options for a month out and I was up 150%. I put down $1,000. I was up to 2,500 on them and just never sold. And I ended up selling them at break even, and I was like, what? Like, why didn't I sell? Because you just think like it's going to keep going, it's going to keep going. And to have that realistic mindset. And I think that's what's nice about the credit spreads, right? Is you can really supercharge growth your account, as long as nothing too dramatic and drastic happens. And if you're playing like stocks that you believe in, also give good premium. And with you buying them, weeks out, I mean, you're watching your Tesla video is what got me into wanting to buy spreads longer than just a week out. Like
oh,
I would always start the week on a Monday or even the Friday before and purchase that closest expiration, sell the put, buy one against it, so that every week I could collect the premium. And I started to realize with like the Tesla one, I was like, oh my gosh, I bought this on a dip. Tesla ripped $30. I'm already up 40%, and it doesn't expire until next weekend. And it's like now I have all this extra value that if I didn't even try and I was shooting for the weekly, yeah, I could be at 80% maybe, but I'm not getting the premium amount. Like
Yeah.
looking at your Tesla plays, I think the ones that I entered about a week ago on them that expire, or the 2 weeks ago that expire tomorrow for me, right?
Uh,
That's it on my return sheet. I'm looking at like 12.5% over 2 weeks, which
yeah.
I mean, for the amount of runway that I had when I entered them, because I entered them at 850. I mean, we're looking at my 735 ones, like
Yeah.
$115 worth of runway in 2 weeks to make 12%. That's stupid.
It's stupid, right? It's the cheat code.
Yeah, it's like I'm cheating. Like this is a cheat code. It's really cool, and I was never into playing spreads on individual stocks. Like I've tried Google. I like Google for it, and I like Tesla now, but I was always an ETF, and the ETFs are definitely like less risky, less scary for me. But with the
100%.
returns you can get on Tesla, throwing a little bit at it is just my account's like supercharged. It's like I hit a supercharging station. Elon was there, like, here's your
Right.
portfolio. Like I don't. Those premiums are just so good. We have the extrinsic value on our side. Like it's just so cool.
Absolutely. Yeah, and that's why it meets like all the criteria that it's important to me. It's a stock that I'm definitely bullish on, and it's still so volatile. And that's what, like, when I see it drop and people freak out like $50, I'm like, no, this is what is ensuring our future premium that we're going to get for this stock. I was actually worried about the S&P inclusion, like if that was going to bring stability to it, and then all of a sudden I'm not going to be able to do this. I don't want to do a credit spread risk $500 for $10. Like,
Right.
give me my $100, give me my 120, like something at least decent. But I mean, the volatility is definitely a big plus for us as long as we're not being super greedy with our strike prices.
Right.
And I've been guilty of it, and I've paid for it, and I've learned, and just kind of revised as I've gone. So
100%. And I do see you have a dip about a week or a month ago on your portfolio. And if you want to chat about kind of emotionally managing that, and I'm not sure if you took a realized loss there at all in any of your positions, of course, but just for your emotional sake of seeing your portfolio down 30 grand and, not panicking, also not taking on more than you can handle, right? So you just have what you're comfortable with, and how you're able to manage that, because I think that's something, even today, or yesterday when we were doing Tesla and it dipped in the morning, I was down 1,600 in my portfolio. And of course, that's not all spreads. A lot of it was, but I got all my shares down too when the whole market dips. And it's like, how do you manage just knowing that poof, it's gone, but since it's all unrealized, it can come back. Like today, I'm in the green on everything now.
yeah,
It's just how do you deal with that mental, emotional kind of, I don't want to say baggage, but I know everybody has it, even if you're down $100 or 1,000, and you get used to it. Like the more that you're down in a day, the more you get comfortable being down more. But
yeah.
just to know, like, hey, not all hope's lost. I'm not going to panic sell. I'm looking at my levels and everything looks good. So you hold. So I'm just curious to see your perspective on that.
Yeah, so I mean, one of the things that's very helpful on this account at this point is to zoom out and look at the yearly, instead of I don't even know what today.
Yeah.
So yeah, today we've dipped down, so maybe that looks ugly. My weekly probably looks pretty ugly.
Yeah.
But I mean, if I can just zoom out a little bit and look over the last 3 months, and cool, we're having a terrible day, but in perspective, we're up 130,000.
Yeah, you're about to buy 3 Cybertrucks and
right. Yeah. So part of it's that is just kind of taking a step back. It's definitely going to be emotional for everybody. I don't think option investing is for everybody. I think there's people that definitely cannot handle it. They can't handle stock investing.
Yeah.
Like if you can't handle it, you don't necessarily know it. it's like, you know, if especially like when it's up, that's like when you go to the casino, you win the first time and you think you're invincible.
Yep.
And I'm a slot machine genius or something. and then yeah, it can go against you, but you have to, I mean, I realized that going into it, and that's why I play down where I play, because I'm very comfortable with that. So that little bit of a dip, yeah, one, I'm comfortable with the levels. Two, I know I have enough extrinsic value in everything to where I can move those out.
Yep.
And I have all the confidence, maybe too much, but I have all the confidence in the world. Tesla's not going to be a $400 stock again. It's not going to be a $500 stock again. It's just, in my mind, it's just not, seeing their growth and everything that they're getting their hands into.
Mm-hmm.
So as long as I have that extrinsic value, I have time on my side. That's what we're selling. I'm perfectly comfortable with that. And then the other thing, like you mentioned, when you go through a few, it's like we went through, it was before I had to deal with it, but like, the .com bubble, 2008 with the housing crisis, like even looking at the S&P from the pandemic, right? Like now that's like, you start zooming out on the S&P, it starts just looking like this little hiccup, and that was major. That was global. That wasn't just United States.
Oh, 100%.
And and then when this does happen, most of the time I'll make a video and just say, hey, keep calm. This is really where we're at. Let's step back and think about it and everything.
Mm-hmm.
Sometimes that's just as much for me as it is for everybody else. Cause I'm, it's not the most awesome thing seeing down 20 grand on the day, but step back, see where you're going to be. And then it does become easier when you've seen the dips, what's on the other side. And it's like when your very first girlfriend breaks up with you or whatever, and it's the end of the world. And then, a few relationships after that, you're more prepared.
Oh, 100%.
You're okay.
That's a great analogy, by the way, too. You just learn and grow from it. And then you're like, oh, that wasn't that bad.
Right. I'm still alive. In middle school, I thought I was going to die because I lost my first girlfriend.
Your 8th grade girlfriend was like, sorry, I know you didn't buy the dip, so I'm leaving.
And now I can't tell you her name, so right, so now we're there.
Yeah, seriously, and like you said, over the long 5-year index, it looks major, but it's just a little hiccup, like in the grand scheme. And there, there's a lot of that fear indication, and the news tries to make it look like the world's falling apart. But if you just step back and look at where all your levels are and what your account return is, and maybe you have a month where you're down 1,000, like. My entire month right now for my long-term portfolio is currently negative because Tesla was 900 like 2 weeks ago and is now 788 I think right now or something. So that's the thing, right? You just get used to, hey, this is dipping for this month. It's all right though. I'm long-term bullish, and that's my entire thought when Tesla dipped to like 330 in September after their split, and the market got a little rocky. My whole goal with that was just, let's pick up on the dip, let's pick up spreads, let's pick up all these plays, and just stay patient and mindful and know, like, maybe we deserved a pullback because SPY ripped 27 points in a week in the end of August. It's like, when you look at it from that perspective, when we're in a bull market, everything's good, right? But when you have a losing day, managing your emotion and your risk and your reward ratio, you really, as long as you just keep it in check, like, and I think that's one thing that I admire from you, just seeing how you've grown your portfolio, and I just think it's something that's really awesome.
Yeah, and that step back to, like, none of these stocks we're trading to eat today. We're not paying our rent today with any of this stuff. This is become wealthy years from 5, 10, 20 years, whatever your outlook is. It's the day doesn't matter. And then, 5 years from now, you look back at this week. Oh, you remember when we were complaining when we were down 20 grand, for 2 days in a row, and now our portfolio is 2.5 million. Like, just, it's all just going to be a blip. And the other big, like, overall picture for me is when we lose $20,000 in our portfolio, I think we are totally blessed and lucky to have $20,000 to lose.
Yeah.
Like,
100%.
Like, man, when there are people that need that $5, $10 to be able to eat, and we're up here playing with, tens of thousands of dollars. And I don't know if you've ever thought about it, but since we're playing with playing with options, the amount of money we're controlling is nuts, right?
Absolutely. It's and like and I'm a big fan of like humble, like gratitude, all that. Just stay humble. People have it worse than you do, and I was thinking about that a lot yesterday when you said that in the Discord when you messaged like, hey, we should be grateful in general that we have this money to lose, and it might mess with some people's minds for a little bit, but just in general, it's not like we need this money right now, or it wouldn't be in the market, right? So
Right.
that's what, like, when you said that, I started to really think. I was like, he is so right. Like, just to have this money to play with in the first place is just so humbling. And I donate, some of my YouTube ad revenue to charity just cause, it's like if I'm in a like if I am in a opportunity like that to do that in a position, I always try to, whatever you can give just always comes back to you, and
Oh,
you know
definitely.
that, like, when you roll a spread and lose some money on it, and then you see that your debit spread's up 2,300, you're like, oh, whatever.
You're right.
So
Yeah.
that's the nice thing. Like, yeah, you might lose money in the short term, but as long as you aren't, of course, blowing up your account by constantly buying calls and puts and driving your account down like to 90% loss or whatever, you can take a loss, roll a spread, and make that money back over the next couple weeks to a month or whatever, and then you're right back
Yeah.
on track. And the market can do whatever it wants as long as your spread legs don't get compromised.
Yeah. And it can take, I mean, even if it is 3 or 6 months, who cares?
Yeah.
Like we're not trying to do this overnight. Not Wall Street bets around here.
Yeah, it's not,
Maybe with a small percentage of the account, but for fun. Yeah, totally.
100%, man.
Um,
That's
yeah, that's super cool that you give away too. Yeah, I love it. That's like, to be able to give to other people is just, it's rewarding. It's rewarding definitely for both sides.
Yeah, and I was listening to a Joe Rogan podcast earlier today while I was watching the Tesla charts with our spreads on them, and he was talking about just money in general, and he was like he was like, who cares if you just got like a random 10 grand given to you, like, people, for everyone who's like wants the handouts or whatever, it's like that's not the thing with money. Money is so like purpose driven. It's not, oh, how much money do I have right now? It's like, am I doing something that's going to help me get to where I want to be? It's like that purpose behind it. And that's something that I really admire with what he was saying there. It kind of shifted my perspective a little more, kind of in like that giving, like we were just chatting about. And just to hear him say something like that was one of the most like humbling things, right? Of just like, hey, if you're, yeah, it'd be nice. People give you this money like up front, like right away, and you have like 10 grand, but it's like people are looking for more than just money out of their situation, right? You have this goal in mind of, if I get this money, you have this pursuit of, I can buy this, or I can be, work on my own projects, self-employment,
Yeah.
whatever it is, right? Freedom. That's what's really cool.
Yeah. Yep. Especially after when you've met all your needs and you're good to go. Right?
For real. And that's like and you're not trying to Wall Street bet it, like you said, to where you're like, I need to pay rent next month. Here's my last 200 on whatever, Apple Call, and it's crazy.
Yeah.
Crazy.
Yep, we've all seen that video.
Yes, that specific one. But yeah, that's why I'm super happy to have you on today, and your shares look phenomenal. The lemonade stuff, I think that looks fantastic, and that's one stock I wish I would have grabbed back when it was $50, and I was just so caught up in other things at the time, and it's a good one.
It's terrible. There's just like, you can find a million companies that you want to buy, but then all of a sudden, like, if it's so diluted, then you don't get any of the upside. I mean, I guess the good thing over the past year is you could have bought just about anything at all, and you're pretty far up. So.
Oh, 100%. Yeah, anything.
Yeah.
You could have bought anything and you're doing fantastic now. And, you know, and that's one thing too with like managing expectation in the market, you know, and there's people who maybe this is their first year and their portfolio is up 100%. And like that was never the case. Not even through this last like couple of years specifically. You know,
Right.
it's like it's specifically from having that large of a dip. Like if anybody bought SPY before the crash, they're up only like 15%, you know. But
Yeah.
since you were able to buy, whoever was able to buy during the dip, they're doing pretty well right now. So that's what's really crazy.
Which that's all. I mean, that's just part of us all being super lucky too. I mean, the fact that
100%.
we have all this information available, like I was able to educate myself relatively quickly on this stuff, and then have access to all these brokerages that give us access to trade like so easily. I mean, I know I use multiple ones, but just for the average person to be able to jump into Robinhood, I mean, nothing's easier.
Mm-hmm.
I remember looking at, like, I have a TD Ameritrade account, and just to buy some shares, it is like I can open up 4 iron condors on Robinhood by the time I purchase some shares on TD. It's just like that much slower. So yeah, we're just, I don't know, super fortunate.
100%. Yeah, I agree with that, man. Step by step, and I'm super grateful to have you on today. And is there anything else you want to chat about or touch on that you kind of had in mind beforehand?
No, I'm sure if anybody has any questions, I'm sure we'll get a slew of comments down below.
Yeah,
But
we could always touch on it in our next one.
live stream on Saturday too,
Yeah.
which is super more fun with more people. We're gonna have to do a drunk stream.
I'm gonna leave that part in.
What's that?
I said I'm gonna leave this part in.
Okay. Yeah, see if we
stream.
can get like a couple other people to
Oh, I'd be down for that. That would be a blast. Are you kidding me? Everybody.
I know,
would.
right? Might as well have fun.
Well, I want to thank you again for coming on the video, Theta, and showing, you know, your portfolio, what you've grown. And I know you're a big fan of paying yourself too, you know, where you just collect your credit and move it to your bank and do whatever you want with it, because that's important as well. You know, you're really taking care of yourself, and that's something that's really cool to see. So I appreciate you coming on. So if you guys want to check Theta out, I'm going to link his YouTube channel down in the description, down in the top comment, and we're going to have him on in the future. So you should definitely check his stuff out. I know he uploads multiple times through the week, if not daily. Also does live streams. So that's going to be everything for me, but I really appreciate you coming on, man.
All right. Thanks, Logan. Thanks for having me.
Yeah, heck yeah. Well, we'll have you on in the next one. Don't forget to leave a like, a comment, and subscribe on this video, and I will see you guys in the next one.